when you have $35 trillion or whatever, $20 trillion of marketable debt, and you're not growing as fast as your interest payments, then mathematically you cannot escape that. I don't care how many stable coins you have. At the end of the day, you don't want to own bonds. And if you have the ability, you want to be selling dollars and owning a hard asset like Bitcoin or gold. I think I have a $250,000 end of year price target.
Is that still your price target?
I think we could double going into the end of the year.
Arthur Hayes starts with a simple but devastating truth. Our bags perform well when there's more fiat created. In other words, Bitcoin's strength is not random. It's mathematical. It's the direct result of governments expanding their balance sheets faster than they can control. When fiat money, dollars, euros, yen, is printed in massive quantities, it dilutes purchasing power. Salaries don't rise as fast as inflation, and everyday workers lose ground. So what do people do? They chase hard assets, gold, stocks, real estate, and now crypto.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Our bags perform well when there's more fiat created. And we have a small asset. It's fixed supply asset, Bitcoin, and obviously there's other cryptos. Fixed supply asset, we have this gargantuan amount of fiat that has been created and will be created. The faster that goes, the more people run to Bitcoin and crypto. And so if everyone believes that, okay, Trump's got control, you listen to what Buffalo Bill Besson says on television and the print, and he talks about how they want to revitalize America and they want mortgage rates to come down, and everybody gets a house, everybody gets a car, everybody's got a good, nice job, all these things, but no one pays any more taxes. So everybody's got this new amazing life that they didn't have to pay for because there's magic money coming out of the sky, provided by the Federal Reserve and the U.S. Treasury. Then our job as investors is, okay, well, we know that if you earn a salary, you're fucked, right? You're just going to not make ends meet. So then what do we have to do? We have to find a way to get some sort of financial asset. And previously it was like gold and stocks, right? Before crypto. Now we have crypto, which has been the best performing asset class, Bitcoin, I'm talking about, in human history. When you talk about the amount of fiat that's been created since 2009. So, okay, I need to save some fiat. I need to buy some crypto. Hopefully it goes up as there's more fiat created. I know that my salary is not going to go up as fast as dollars, yen, euro, yuan are printed, and that's sort of the game at the end of the day is what we're trying to do. We don't care as crypto holders because we know the math. We know that the debt load will go faster. And what did people do in history? Either they do some sort of debt jubilee. So the American political class could say, okay, we're just going to cancel all the debts. We're not going to pay back to foreigners, but we're not going to pay back people and asset holders as well. There's costs and benefits to doing that. Or we're going to inflate away the debt, right? Run QE for poor people and get the debt to GDP down. That's what they did after World War II. That's also an option. So there's different paths, but at the end of the day, you don't want to own bonds. And if you have the ability, you want to be selling dollars and owning a hard asset like Bitcoin or gold. When you have $35 trillion or whatever, $20 trillion of marketable debt, and you're not growing as fast as your interest payments, then mathematically you cannot escape that. I don't care how many stable coins you have. Like, great, de-dollarization was slowed. But, if I'm Saudi Arabia or China or Japan or Germany on a net basis, I don't really want to own a treasury. I want to own gold, or I want to invest back in my own country because I have to be accountable for my people for this change in the architecture of trade. Cool. It's great that you got a bunch of poor people around the world to have a dollar, and maybe that's a few trillion more, and they buy some T-bills. But they got to refinance it every 3 to 12 months. Like, it's not the end state that you want to be in. And especially if your debt load is growing faster than your economy, like exponential math doesn't give a fuck about. I think I have a $250,000 end of year price target.
Is that still your price target?
I think we could double going into the end of the year. My concern is, okay, well, from a political standpoint, a lot of this depends on Senate confirmation in the United States. And if you look at Stephen Moran, which is the most recent board governor confirmed by the Senate, it was by 1 vote. So it's very, very tight for Team Red Republicans to get their people through.
Team Red.
And so I am operating under the assumption that Team Red loses to Team Blue in November 2026, both the Senate and the House possibly.
Yeah, Mamdani is certainly giving
Which
us
means that if Trump has anyone who needs to be approved on any of these supervisory or boards, it better happen before then. And so my thesis will be more validated if obviously Jerome Powell will be off the chairmanship in May of 2026. How do the elections go with these board governors and the district banks? Can he get Cook fired by that point? And so once he gets all these pieces in place, then I think it's going to be crazy nuts time. Because then, obviously Besant's on board. Then you have the Fed. Now you have control of the banking regulations, so you can deregulate the banks. You have control of the mortgage market. So there's, I don't know the amount, but there's like something single digit or tens of trillions of dollars of home equity locked in American homes. And if you lower the rates, they're going to spend the money, especially if the federal government is underwriting these loans. So the housing market could be used to juice things even further. Again, you need control of certain agencies to be able to do this. I think by mid 2026, if we're going to get this money printing bonanza, Team Trump needs to have gotten all their people in place. Because post then, I think it'd be very tough for them to, beat the Democrats, just because people don't like him. Half the country hates Trump, and so what? The thing's in the other direction. The market value of U.S. debt, assuming that it's there, something like $1 trillion. So, the Congress in the United States decided to revalue the gold to whatever it is, $3,800 an ounce. Then there would be $1 trillion deposited with the Treasury, and they could go do whatever the fuck they wanted to do with that money. So that's essentially a devaluation of the dollar. And obviously, you could imagine that there could be a lot of market stress, because that's the United States government admitting that the dollar is not really worth this much money. And so if you own a Treasury bond, like a 10-year, 20-year Treasury, what happens to that market? Does the 10-year still trade at like 4.14% or whatever it is today, or does it trade up to like 10%, or does it cause some market dislocation? So I think there's a lot of unknowns in terms of how the market, specifically the U.S. Treasury market, reacts to the emperor admitting they have no clothes, right? Which is what would happen if you did this massive devaluation. Yes, the Treasury gets this great one-time accounting gain of $1 trillion that they get to spend on different sorts of things, but it's the United States admitting that the dollar is not worth that much.
I see.
And so, again, who knows? Maybe nothing happens, maybe something happens. And I think that's what probably gives Besant and co. pause. This is probably the last option that they'd like to pursue in terms of what they would do with the market. And unfortunately, the United States doesn't mine that much gold. China mines lots of gold. They would love this to happen, right? Because the Chinese people have been loading up on gold since 2008. They're encouraged by the insurance companies, by the banks, to go, instead of, if you don't want property, you don't want stocks in China, okay, you can buy some physical gold. And we're okay with that as a Chinese government, because it's real wealth to us. And we believe that the United States at some point is going to have to admit that the dollar is a piece of trash and do some sort of massive devaluation. And that massively helps the yuan, because the Chinese people have so much gold. So again, there's a lot of geopolitical market questions around doing this. So I think it's a last resort for them.
Hayes also warns of a brewing corporate war in crypto. He points to Binance's strategy of backing projects like Hyperliquid, not for partnership, but for competition control. In his words, Binance could say, "You only exist because you give 97% of your revenue back to users. Let me take your revenue to zero and see how long you last." It's a ruthless strategy. Offer zero fees, create hype, flood the market with new tokens, and crush competitors before they mature. In Hayes' view, this is how major players will fight for dominance in the coming years. An all-out liquidity war where exchanges, tokens, and protocols battle for the same pool of speculative capital.
Once you have a stablecoin and now you've got a dollar bank account, if you're not an American, now you got a dollar bank account. What do you do? Okay, well, I want to earn Fed funds, whatever it is, 3, 4, 5%, whatever it ends up being. Okay, I've done that. Okay, cool. All right, so more inflation. Got to do something else. All right, so what else can I do? Oh, there's this thing called Athena. It's an endogenous yield in crypto. It's usually about 2 to 3x, which you get in treasuries. Okay, cool. I can make it 10, 15%. All right, what's next? Oh, I want to go, buy coffee at 7-Eleven. Oh, we'll take your stable coin and we'll let you spend it offline and using EtherFi and other solutions. Okay, cool. All right, well, I'm still broke as fuck. I'm making 10% of my money. That's great. I'm making better than the bank. I'm not getting depreciated like I was in Argentinian peso or something like that. I've done well, but I need to make more money. Okay, I'm going to speculate. So now I'm going to go to Hyperliquid or whoever the dominant DEX is at the time, and I'm going to trade, I don't know, Dog with Hat, Pepe Coin, Bitcoin, whatever the fuck I want to trade. I'm going to speculate on everything with high leverage, because it's the only way that I can escape this drudgery that is working for a fixed salary that doesn't increase as fast as the amount of money that's being printed. And so I think that's what, this very sad situation that the world is in, but this is where anyone who doesn't have financial assets finds themselves is, okay, the only way out is to speculate. And now I have this new way of speculating that's outside of the stock market, which, is intrinsically rigged against me. You might say crypto's rigged against you as well, but I say that there's more opportunity to trade whatever you want, however you want in the crypto space versus in the domestic stock markets around the world. And so now people can say, okay, I've got these stable coins. I literally just connect my wallet and now I have this whole, ecosystem in front of me where I can trade these things. I can lend these things. I can borrow against these things. I can do all these different things and hopefully outpace this inflation that's being generated by the powers that be. People love hype because they know that hype makes money and therefore they buy back their token. Well, I'm assuming that CZ is backing Aster. You tell me, you're probably more Louise in this than I am. Let's assume he is, right?
Yeah, he's an advisor.
Why would he do that, right? Well, Hyperliquid, the more successful Hyperliquid gets, the less successful Binance is. So Binance makes so much money. And so they say, okay, well, you only exist because you give 97% of your revenue back. So let me take your revenue to zero, see how adamant your community is to use this solution versus mine. It's zero fee. We're offering the same product. It's not like there's not that much difference in the perp decks. Yeah, you could say the latency is this or that, but retail people don't give a fuck. I give you Zia free. I give you a new shiny token to trade in the BNB ecosystem. Look at what I've done to all these other shit coins, regardless of whether they're value or not. And so, okay, hat over to you, Hyperliquid. What are you going to do now that you have no revenue anymore? What's the new thing that you're going to be able to charge somebody for when I'm just going to give this away for free? Because I don't care if Aster makes any money or not. I just want I want my Binance to stay very, very profitable. So I think, again, I don't know how or if they're going to overcome this. I just see that there's a North Star. There's going to be all these stable coins. There's going to be all these traders. Whoever's still around in the next 2 to 3 years, they're going to kill it.
Yeah.
But you got to make it through this trough of making no money. The Fed money moves basically through the large money center banks to financial players or large corporates, right, who have access to institutional corporate debt markets, or a private equity firm who has the ability to borrow to lever up an existing cash flow stream. So no new cash flow streams are created. I just have access to credit from the Fed and the banking system, and therefore I'm going to lever up an existing cash flow stream. So no one new gets hired, no new economic growth, nothing like that. So the money multiplier is very, very low. The average person doesn't receive any credit. But in this situation, I call it QE for poor people, when the regional bank is lending to a SME or an industrial firm, right? They're creating this new loan, creates a new business. They're going to build a new factory or start a new product line. They need to hire more workers. Those workers get paid. Those payments go into the banking system. And so the money multiplier is ultimately higher. Nominal GDP grows faster, and obviously inflation grows along with it. And so you get a faster expansion in the money supply, you get a faster expansion in economic growth, and you get a faster acceleration of inflation, and that's what drives assets higher. And so, but from the government perspective, their debt to GDP declines,
right,
which is what it did from 2020 to 2022 when Trump and Biden did this policy for a little bit. Traders want leverage, and in traditional finance, it's very difficult to get high leverage. I'm not a big trader in TradFi, but listening to people talk about I think in the US there's something called a pattern day trader. You trade too much, your brokers, you're a pattern day trader, so they shut you off, right? Okay. So you do all these different things, you're not breaking any laws or anything. You get less access to leverage. And around the world, certain regulators don't like you to have leverage. So then you're forced to do these like 0-day options and all these other funky strategies, which are essentially, you're just handing value to the market makers and to the large banks, because the product that you really want is it's a very highly leveraged, what we call the delta one. So you make 1% in your money versus a 1% move in the price of the asset. You just want to have leverage on that. So the perpetual is this perfect way where the exchange can operate these socialized loss mechanisms. The customer understands that at a certain price, I might not get the full payout because the exchange doesn't have enough money to cover all the levered bets they have. I accept that as a cost, but in return, I get this instrument that lets me bet with high amounts of leverage on anything that I want to trade.
Okay.
And I think that is revolutionary for a retail trader versus what's in TradFi, which this isn't the way it's operated for various reasons. And that's why I think it's a 0 to 1 moment. Okay, retail gets what they want. They want highly leveraged trading. They don't want to trade 0-day options and all this other funky stuff. They just want plain vanilla, give me a futures contract, delta one exposure, and give me high leverage. And this perpetual thing makes a lot of sense because it looks like I'm trading on margin, and I understand margin.
When money creation starts moving through regional banks, SMEs, and local businesses, the effect is very different from traditional QE. Hayes calls this QE for poor people. It means money flows to where real activity happens. Small businesses hire, factories expand, and nominal GDP rises. But with that comes higher inflation, and higher inflation means higher asset prices. It's the same pattern we saw after World War II and again in 2020 to 2022. The government prints, the people spend, the economy overheats, and asset holders, especially those in scarce assets like Bitcoin, win big.